system. I think you have to go back to Ken's original work with Jeremy Bulow to understand all this. If you're thinking about why governments shouldn't become too large, because that might actually defeat the very purpose of generating growth in the first place, you can go again to his book with Carmen Reinhardt on This Time is Different, that covers debt-fueled boom-bust cycles over the last several centuries. And, just lo and behold, he really has this amazing book that tries to explain cash and its various ramifications in a very powerful way. I think what I got from Ken's talk were two powerful ideas, that cash is attractive to people because of two reasons. One, it gives you anonymity in your transactions, and it by and large also gives you some convenience. And I think at the intersection of this anonymity and convenience is, of course, things related to tax evasion. I think evading taxes is possible if you can keep your transactions anonymous, and it's a form of pecuniary convenience. I think all of us who've grown up in India, we know that more than 80% of savings on average for an Indian household is in the form of property. And I think everyone aims to do this, and therefore they keep building a pile of black money as soon as they have their first salary hit their pockets in one form or another. And I think we seem to have come up with a very clever innovation, or jugaad as we would like to call it, which is that we by and large don't store cash that much. We've figured out through this system of gold and real estate holdings that we'll just keep it moving in the system like a hot potato. The cash is just constantly lubricating all these transactions, and in a way, therefore, the collateral damage that Ken was referring to when you suddenly stop having cash in the system also has played out, I think, in one way or another in the economy. I wanted to mention one thing and then ask Ken a question. The one observation that I've had about the recent Indian experiment has been that there's something interesting going on in terms of financialization of savings. So coming back to this point that the average Indian household is keeping more than 80%, perhaps even 90% if you include gold and real estate together. I think this seems to have had a pretty non-linear shift since November and December. The flows that are going domestically into mutual funds, structured investment programs as a form of savings. If you look at the insurance premia collections over the last 7 to 8 months with all our large insurers, these are all massively on the rise. While there are other explanations that should be tested, it seems that perhaps a little bit of wrinkle in maybe a middle-income Indian household thinking whether it's a good idea anymore to actually keep everything in black or to keep everything in real estate. Maybe it's time to what's become white in your bank deposit, keep it white by going into financial assets until maybe a tax authority gets back to you. Maybe they won't, but at least you would not have done two black to white transactions back and forth, once to get your currency changed and then go back into the black money circuit. And I think there's something remarkable going on, maybe almost a bit dizzying and worrying at some point, is that I imagine that if this continues, it has basically changed the discount rate on valuation of financial assets in the following sense, which is that if you thought that stock market holding or bond holding was not that attractive from a tax evasion perspective because it's all open, it can be traced very easily. In some sense, your tax-adjusted discount rate on these cash flows was very large compared to, say, going into gold or real estate. But I think I sense from the flows I'm observing in the financial assets that something has changed in the way people view black money transactions, the ease of just going and buying another property with your savings, perhaps fearing some action maybe because it's it's hard to hide a big property transaction if someone really wants to go after you. Maybe it's easier to hide some pieces of gold here and there. So I think we have to wait, and I think Ken is right. It will take us many years to understand which of the various explanations are right. But with that sort of slightly long rejoinder to Ken's remarks, I had one question for Ken, which is on this idea of digital central bank currencies that's, I think, picking up hold. One of our just retired deputy governors, D.G. Gandhi, who was in charge of all the currency management operations, he also used these two words, anonymity and convenience, as the reason why people are holding cash. His explanation for why Scandinavian countries are moving faster to electronic currencies was that it just too cold to go to the bank, and so it's easier to use wallets. It's just very convenient. That may not explain Nigeria or Argentina, which also seemed quite high in being very low cash usage in the economy, but maybe that has to do with crime or something like that. Maybe they use dollars. Yeah, that was my dollars. Yeah, exactly. Yeah. So the question I have on digital central bank currencies is that it seems that by default, if it is digital and it's a central bank transaction, it will always be recorded. Like the moment a transaction takes place, a central bank would know, and won't that make it very unattractive to people to use that for doing transactions?
Yeah, I mean, you have to have it be recorded, otherwise no one will pay. They'll use digital currency, be a superior version of avoiding taxes and corruption to what you have now. But I think we're moving in that direction with no central bank digital currency. The questions providing a convenient alternative for poor people, providing financial inclusion, there are different approaches. You can force banks to subsidize low-income people, but I think the central banks are looking at it, and they're very, very far from implementing it, are trying to ask themselves, the question about whether they can provide at least what I describe as a public alternative. But think of digital currency as an alternative to debit cards, credit cards. It's called digital currency, but it's not. It's a digital debit card. It's a central bank debit card in a way. But by the way, I mean, China's ambitions may be greater than that. Under the way things are moving currently, the dollar is actually getting stronger and stronger, and the day where the yuan, the RMB, is going to take over from the dollar seems farther and farther away. If they created a digital platform that was just way ahead of everybody else, that could accelerate that transformation, and they may have that in mind also.
I see. That's great.